Welcome back to the channel. In this video, I'm going to be talking about the UK budget, the rumours that are in it, and most importantly, how it's going to affect you. Now, first and foremost, why is this such a big budget? This is such a big budget because the government has a £22 billion black hole in its budget, right? And in addition to that, they want to give themselves about £10 billion in breathing room should anything happen over the next 6 to 12 months. So they don't have to do this again anytime soon, which is massive tax raises, which I'll get to in a bit. But in addition to that as well, BBC and a few other news outlets are reporting that there's a potential $22 billion further deficit in the budget because of productivity numbers in the UK decreasing. Now, let's get into the budget and how it's going to affect you. Now, the first thing the government is likely to do is introduce income tax raises. Now, as part of their manifesto, they said that they would not raise taxes on income taxes and VAT, and there was one more, I can't remember it right now. Now, what they're likely going to do is that they're likely going to freeze for a much longer period of time the tax thresholds by where you enter different tax bands. So those have been frozen for a long time. They were set to be frozen until 2028. The government will probably elect to freeze it for further years, which basically means that as inflation happens and the number of your salary goes up, even though what you can buy with it goes down, even though the number goes up, you enter into different tax bands. So for example, as minimum wage has been increasing, the tax band by which you pay income taxes has remained the same for a number of years. What that leads to is people like police officers, firefighters, teachers, and others who really shouldn't be paying 40% tax or a marginal 40% tax rate on some of their earnings, slowly creeping up to that level, and more people in the country are in that 40% tax bucket. Just to give you an idea, in 2021 to 2022, there was 4.1 million people paying additional rate tax in the UK, which is otherwise known as a 40% tax. By 2025 to 2026, we could see 7 million people paying that amount because the bands have been frozen. That's an additional 3 million people paying a 40% tax on at least some of their earnings. When this first started, this was a marginal tax rate that only really affected the most wealthy in our society. This has now become the norm for most, if not all, office workers, a lot of public servants, a lot of people who, quite frankly, shouldn't be paying that much in taxes. There's also rumors that they're going to change the rules around limited liability partnerships. These are generally partnerships for professional services like accountants, lawyers. So if you're an accountant or a lawyer, and you have a limited liability partnerships with a few other professionals, and you are distributing that capital to yourself as part of your regular income, it's going to become a lot more expensive to do so. Now, the big one that most people are talking about is the government going to replace stamp duty? People are currently talking about a property tax when you sell the property, effectively some version of capital gains tax, which you're currently exempt for when you sell your primary residence in lieu of asking you to pay for stamp duty. Now, this is actually great for a lot of people who are looking to get onto the property market, but it effectively means that there's a lot of people who paid stamp duty maybe 5, 10, 15 years ago to buy their property, who are now going to be asked to pay again a property tax to exit that property should they sell. And I think what it ultimately means is that it's going to create less of an incentive for people, especially those who are retired or their children have moved out, to leave larger homes in space for families to take them because it's going to be taxing to do so. This could have a really negative impact that property prices increase a lot more than what the stamp duty would have cost you, because there's going to be a lot less, in my opinion, mobility and movement in the property market, creating for price hikes. The Financial Times reported that the government are looking to slash your ISA allowance from £20,000 to £10,000, effectively removing the cash ISA component, which is where you could deposit cash up to £10,000 a year, and receive tax-free interest income on that ISA. So what that basically means is that if you're saving in a savings account and you're getting interest and it's not in an ISA, you'll be paying taxes, capital gains taxes on that saving. There are a lot of other taxes that they're speaking about as well. One is a 2% increase in taxes for in income taxes, which would then be negated by a 2 percentage point reduction in your national insurance. And they're doing that, I suspect, to target landlords and pensioners who don't currently pay any national insurance taxes as part of their receiving their pension or on the rental income that they provide, that they're able to get. However, working people do. So it should be a flat or a no difference change for people who are working and paying income taxes. However, for those who are either a landlord or a pensioner, this will have a significant impact on the amount of taxes that they pay each year. Now, look, there are some benefits in my view. The government have effectively floated the possibility of reducing energy costs by reducing the VAT on energy by 5 percentage points. Now, I think that's really interesting and that's good. However, ultimately, it doesn't do enough. We have the highest electricity prices in Europe, and it has a huge impact in our productivity, in the businesses that we can have in this country. And there are a lot of businesses like petrochemical businesses and chemical businesses, a lot of manufacturing businesses that are extremely, extremely energy intensive and quite frankly need to be done in a country where energy costs are extremely low. And I think we lose whole industries as a result of that because we can't get our energy costs down enough. I think the government, to be fair, the last government as well, were really hesitant to consider energy sources such as nuclear, opting for wind, solar, hydropower, which although is great and is clean, they're not as effective in providing continuous power throughout. They require something to happen, something to move, whether it's for the wind to blow or you can only really farm sunlight when the sun is shining and when it's daytime. Whereas something like a nuclear power station is continuous and provides dependable, reliable power consistently at a fairly low price. Though it does take quite a bit of time to get them up and operational. Ultimately, we're looking at a budget which the government has to raise as much as £50 billion, maybe more, if they want to provide themselves with more of a buffer, if they're concerned about UK productivity. And they have to figure out what they're going to cut. And I don't see much in terms of rumors as to what they're going to cut. I've seen some pretty alarming things, like classifying what a working person is, which is something that they failed to do during the last election. And it seems like that number is roughly around £46,000, which is kind of laughable because there's a lot of people who I would definitely consider to be working people who are earning significantly above that. Police officers, firefighters, teachers, nurses, people who are public servants. The government are effectively going to, if that rumor is true, they're going to cite that they're not working people, which would give them permission to tax them more whilst not breaking a manifesto pledge. Ultimately, I think this is going to be a really tough budget. I think this is going to be, I feel like I've said this about most budgets recently, but it's going to have a significant impact in the future of this country going forward. I think that if I was to look forward about 12 to 24 months, this budget's going to cause for, and it's not just this budget, but a lot of the actions that are being taken for prices to be higher. We had the renters reform bill come in, which I think is going to raise rent prices by disincentivizing landlords to stay in the market, which will mean that the few landlords who remain are going to raise those prices to deal with demand. I think that change in national insurance for landlords will have an impact as well. And I think that ultimately keeping us in an environment where interest rates are high, granted, it's 4%. It's been the lowest it's been for a long time. However, as more and more landlords need to refinance and they leave their 2 to 2.5% products to go into, say, 4% mortgage products, they're naturally going to have to start raising rents to even be able to break even. Let alone cost of energy, cost of living has gone up significantly due to multiple factors. And quite frankly, I don't know. I think this government was dealt a really bad hand. I don't think they had the perfect. They were given the perfect public finances were handed to them, and I think it's going to, quite frankly, take quite a lot of years to stabilize this. And I don't know if it's going to be possible. It's not going to be possible in the short term. So I think ultimately in the UK, we're probably looking at quite a few years of pain and high taxes as a result of things to make up for, the current situation that the country's in. It's going to be interesting. I'll be talking more and more about the budget. It's due in about 6 weeks, and I'll be coming back to you guys with what's been reported, the rumors, so you're up to date and you know what to expect. The main thing I would say is I wouldn't make any major decisions before the budget's done, and I think that's what most people are doing. So I'll keep you informed. Thank you very much for watching the channel, and I'll see you next week. Bye-bye.